Good evening, everyone. First of all, a deep apologies from my side due to the issues that network issues in the last class. The ICA and we, the faculties, always wanted to make sure we wanted to give the best out of the sessions. So I'm really sorry. So what we are going to do today is we are going to continue with whatever, we are going to do whatever we are supposed to do on the last class. So we were talking about that we will continue with the valuation of perquisites. When you say valuation of perquisites, we said we have already covered this residential accommodation on how to value it. We were also supposed to cover motor car. So we will continue in this session and complete the motor car valuation and rest of the perquisites. How does it work? So the session, whatever we are going to do, was supposed to be on this 1st of June, whatever we planned for. So we'll continue with that. This will be one of the most important sessions because it will cover most of the valuations with respect to perquisites. And will also cover the other areas such as deductions and relief and all those things. So we'll try to stretch out and complete the entire portions, whatever is supposed to be covered with respect to provisions. So without wasting any more time, I'll start with the valuation of motor car. So as far as this valuation of motor car is concerned, I told you that there are three classifications. Like there is three classification when you say, we are going to understand as we generally do in all of the other classes. What do? We understand what is the particular perquisite and we try to understand what about the taxability of the perquisites. So we will first understand what about this perquisite, how is it classified, when is it a perquisite, when it is not a perquisite. So the first thing, easy to understand, we are going to understand when it is not a perquisite. When it is not a perquisite, it is very straightforward. The car is owned by the employer. That is, car is provided by the employer. When I say owned, it also includes hiring. So either he might have his own company car or the company might hire a car and give it to employee. So that's the first condition. An employer gives the car to employee. Now, for what is he using it? Is exclusively using it for office purposes. Is exclusively using it for office purposes alone. So which means like residence to office and return back and also other office requirements. So that is the only purpose for which the particular employee is using that car. He is not using it for anything else. Now, with respect to this particular thing, in this case, there is no benefit that is attributable to the particular employee. So here there is no benefit or even something provided concession. So there is no free benefit given or some concession provided. So in this case, it is not a perquisite. So in simple terms, if a car is provided by the employer to employee and is exclusively used for office purposes, then in that case, it is not a perquisite. It is not a perquisite. So that's the first classification. What is the second classification? It is only taxable in case of specified employee. In certain perquisites, it is only taxable in case of specified employee. I'm going to give a heads up. We already discussed who are called a specified employee. We said a director, correct? A director who's part of the organization, a shareholder who owns more than 20% of equity, and finally, an employee who's drawing a salary package of more than 50,000 per annum in a year. In a year, if he is drawing more than 50,000, 50, if he is drawing more than that, then he is called as a specified employee. So almost like, so whomever you think of a basic employee, technically or generally, what could be the salary range? You all might have something, an idea in mind. So somewhere around 4,000, 5,000 straight away salary leads to 50,000. So anything more than that becomes a specified employee. So these are the three categories of specified employee. Now, most of the perquisites or almost all the perquisites are if provided by the employer to employee, provided by the employer to employee, it is only taxable in case of specified employee. Else, it is taxable in case of all employees, every employee. So that's what the provision is about. So here the second classification that we are seeing about this valuation of perquisite, it is about specified employees. It is only taxable in case of specified employee. When an employer provides a car to employee, remember this word, a critical word, employer provides to employee. And then it is used for both personal and business purposes. So which means it's both usage. So it's not only office usage, it is used for personal and office use. There is no bifurcation that this much of office, this much of personal. It's not there. So even it could be wholly private also. So it is both office and personal use. So whatever the ratio of office uses, it is fine. So whenever there is a personal use involved, it is automatically covered. And the third one, in the case of all employees, that is, it's a perquisite. In case of car, it is taxable for all the employees when it is owned by the family or employee. Okay. So it is owned by the employee. I'll just put an employee here. Yeah. Owned by the employee or the family members of employees. So it could be the spouse or the parents or family members of the employee. So in that case, what happens is it becomes a car owned by the employee. So that's the first condition. What is the second condition? It is used by the employee. It could be used by the employee or by the family member. So it could be used by either of them. And in this case, the employer reimburses. Now, why is this important? Let's take a situation, okay? I have a car. I'm working in an organization, let's say Infoware. I'm working in a company called Infoware. Now, I own a car. I am using it for personal use and office use. I myself am spending for the car. I am only filling the fuel. I am only taking care of the insurance, repairs and maintenance. So every expenditure, I myself am taking care. Now, can there be any why? Because I own the car. I spend for insurance. I spend for repairs and maintenance. So that's why we said employer reimburses. So in some way, employer contributes to that expenditure. Whatever is being spent by the employee is either reimbursed or directly paid by the employer itself. Employer says, see, this is the office, this water directly paid by the employer. So all the station, give me the bills, I'll give it back to you. So in both the cases, employer reimbursing and employer direct it taxable in case of all employees. That's the three breakup of valuation of car. The first we say car was handed over to an employee on 29th September. 29th September. Income tax says even if it is 29th September, you consider it as 1 month. Consider in that month for considering November, December, January, February, March, 7 months and not 6 months. Why? I travel to GST office. On this date, I travel to income tax office. On this date, I travel to client office. I just fill up. So there must be some authentic numbers, right? The trip sheet must be authorized. So that's why the income tax rules also says get a certificate from the employer certifying, yes, I agree as an employer. Let's say I was saying I was working in Infoware. Infoware says Muthu has traveled for so and so number of kilometers on so and so dates according to the trip sheet maintained and certifies that certificate. So this document must be maintained to prove that it was used for office purpose. So detailed documentation has to be maintained to say that it was exclusively used for office purposes. So only then it comes under this category of not a perquisite, correct? So only then it can be classified as not a perquisite. Otherwise, it will always be classified under this or this as both office and personal use. So that's what it is about. Finally, now let's say the employer, I'm a very good employer, a very dedicated employer. So the company says you have 2 cars. Let one be always available with you. The other one will keep it in your home. If some usage is required, let your family members use it accordingly. So they're giving 2 cars. Now, how do we value both the cars? The provision says, the rule says, the first car, that is 1 car out of whatever it is, use it as partly business, partly private. For whatever purpose it is used, you consider 1 car as mixed use, both usage. The other car you consider as exclusively private. So it is, you treat it as exclusively private, that is 100% private. The 1 car out of the cars provided to you will be considered as mixed, both use. The other car will be considered as exclusively private use. So this is what it is about, valuation of perquisite. Clear? Now we'll have to get into the valuation. So what exactly is the valuation? What exactly is the valuation? So this valuation is about each category. We said in one cases it is exclusively for specified employee. In one case we said it is exclusively for all, that is, it is for all the employees. So this is what we have been saying, correct? Now let's understand in each cases how it is treated. The first thing is, it is the car is owned by the employer. The car is owned by the employer and it is wholly personal. It is wholly personal. So that's what it is talking about. So what does it say? It says the car is owned by the employer. When I say owned, it also includes hired, both the cases. So car is owned or hired by the employer. In this case, what does it say? It is exclusively used for personal purposes. It is exclusively used for personal purposes. In this case, income tax rule says whatever is the actual cost to the employer. So you take whatever is the cost to the employer. What is the cost? The cost is the actual expenditure. Actual expenditure is the first thing. So when you say actual expenditure, you are trying to say some repair and maintenance, some running charges. So whatever is actually spent to maintain that car in running status, to actually maintain that car in the running status, you treat it as actual expenditure. And then chauffeur cost, whatever was actually given to the driver, the one who has been appointed as a driver, that charges, the chauffeur charges, is also considered as the expenditure. And finally, the wear and tear. What did we say as wear and tear? It is 10% of the actual cost. So these 3 things put together will become the actual cost to that employer. So that's what is the cost to the employer. Apart from this, what are you doing? You are saying whatever is charged from the employer must be deducted. So whatever is charged from the employee must be deducted. So now say I'm actually spending 5,000. I'm actually spending. So the cost is 5,000. I get back. So employee pays 2,000. So what is the perquisite? Perquisite becomes 3,000. So the value of perquisites becomes 3,000 because this is the actual cost and this is the reimbursed by, that is what you call received by employee. So this is what we are talking about, received by the employee. So in this case, it automatically is considered as, the valuation of perquisite is the actual cost to the employee, and then whatever is received by the employee is actually deducted. So the actual cost by the employer reduced by the actual whatever is being received from the employee. So this is what is considered as the valuation of perquisite in case of owned or hired by the employer. So that's the first thing. The second thing, whatever is owned by the employee, whatever is in that case, the car, in the second situation, we are saying the car is owned by the employee. The car is actually owned by the employee and it is used for both the purposes. It is used for both the purposes. What purposes? The actual, it is used for both personal and official reasons. For both the reasons, it is actually spent by the employer. So what happens? Employer is paying for the car owned by the employee. So the car is actually owned by the employee and it is used for both personal and official purposes. In this case, they say whatever is the actual expenditure incurred by the employer. So the same as this, whatever we said here, you take whatever is actually spent by the employer. So now what is this? It is your actual expenditure, the chauffeur cost, the normal wear and tear. You take all the three things put together is your actual expenditure, and you should also make sure that you maintain the documents. That is something called trip sheet. You should maintain the trip sheet, right? In this you must reduce. In this you must reduce 900 per month. In this you must reduce 900 per month. It's a flat reduction. It is a flat reduction to the employee, that is 900 per month. So that is what you're actually calling it as actual expenditure spent by the employer minus the reduction. So this is what you're actually calling. So now what happens in the same example, if this is 5,000, the cost is 5,000, you'll have to less how much? 900. So 4,100 becomes the valuation of the perquisite when the car is owned by the employee. Car is owned by the employee and it is used for both personal and office users. So that's what you're actually calling it as the perquisite valuation, the case where it is used by the employee. Clear? Now moving on, the next scenario. What is the next scenario that we are talking about? In this scenario, we are saying car is owned by the employer. Car is owned by the employer. Please understand, whenever we are saying owned, we are also talking about the term hired. We are also talking about the term hired. So it could also be rented. In that cases, to take the actual expenditure, you should also consider the rental charges paid by the employer. So that's what it is about. But here, when it is actually owned by the employer and used in both the scenarios, that is both personal and official reasons, it is straightforward. It is a very simple case. So you need not calculate how much is the actual expenditure. You need not get any money from the employer. Nothing is relevant. Nothing is relevant. What is actually relevant is only to understand whether employee himself is meeting the expenditure or it is being reimbursed. Whether it is actually used, spent by the employee or it is actually spent by the employer or reimbursed in both the cases. So we'll take a small example. Employee spends, employer reimburses. So this is considered as one scenario. Or employer directly spends. So in both these cases, it is called as what? The first case. The second case is employee spends and employer does nothing. Employer does nothing. So this is the second scenario. So that's what we are calling it as first scenario, second scenario. So in first scenario, the rate depends on the engine's cubic capacity. That is the capacity of the engine. So what is the capacity of the engine? If the capacity of engine is less than or equal to 1.6 liter, that is like 1600 cc. So 1.6 liter capacity is 1600 cc. For 1600 cc, less than or equal to 1600 cc, the engine is more than 1600. If the cubic capacity is more than 1600, then the cost becomes 2400. So let's understand this. For a 1600 cc engine or 1.6 liters, okay, 1.6 liters or 1600. So if this is the capacity of the engine, that is less than or equal to. So if it is less than or equal to 1600 cc, then it becomes 1800. So 6 becomes 8. 6 becomes 8. So for 1600, the charge is 1800. For less than or equal to 1600 cc, the charge becomes 800. So 1600 becomes what? 1800 if it is less than or equal to. Whereas if the charge is more than 1600, so that is if the engine capacity is more than 1600, greater than 1600, then add 1800 plus 600. Take the 600 and 1600 alone, it becomes what? 2400. So if your engine capacity is less than or equal to 1600, you charge 1800 per month. 6 becomes 8. 1600 cc less than or equal to, it is 1800 per month. But if it is more than 1600 cc, if it is more than 1600 cc, then it is 1800 plus the 600. That is in 1600, you take that 600 and add it to 1800. What does it becomes? It becomes 2400. So that's the monthly charges per month perquisite valuation. For less than or equal to 1600 cc, it is 1800. For more than 1600 cc, it is 2400 per month. This is the valuation of perquisite. In case you are a very a VIP employee or in a top level, you are also given a driver. You are also given a driver, a chauffeur. In that case, you add plus 900. You add plus 900. That is what? 1800 divided by 2. So if you actually see, every number is appearing in what you are seeing itself. So if you divide it by 1800 by 2, it becomes 900, correct? So 900 is the chauffeur charges. So 1800, 2400, 900. So this is what is there if the cost is reimbursed by the employer. Reimbursed by the employer. Now, if it is actually met by the employee, if it is actually met by the employee, in that case, it is only 600. So we'll again go back to our example. It is less than or equal to 1600 or let's say 1.6. You take this alone. How much is it? It is 600 per month. It is 600 per month. Now, if it is more than 1600 liters, that 1600 cc or 1.6 liters, then now 6 becomes upside down. What becomes? It becomes 900. 6 becomes upside down. In the first case where it is met by the employer, 6 becomes 8. Now 6 becomes upside down. It becomes 900. So it is 900. If it is more than 1600, it becomes 900. In case of chauffeur, it is same 900. So that is, you add another 900. In both the cases, chauffeur is 900. So there is no change in the chauffeur charges. That is the driver's charges, irrespective of whether it is spent by the employee or spent by the employer. In both cases, the driver's charge is same. There is no change in the driver's charge. So this is what it is about. So I'm just trying to tell you how to probably remember this provision by linking the number. Just see the number 1600. If it is less than or equal to 1600, 1600, the 6 becomes 8. It becomes 1800. What happens when it is more than 1600? More than 1600, in the 1800, you add 600. In the 1800, you add 600, right? So it becomes 2400. So that's what in the second case. In case if it is actually spent by the employee for 1600 cc, you keep 600 alone. Leave the 1000, keep the 600 alone. For more than 1600 cc, 6 becomes 9. Just imagine the numbers, 6 becoming 8, 6 becoming 9. And imagine and remember the numbers. It is easy to remember if you remember it this manner on how each number turns. So for 1600 cc, we are saying 6 becomes 8, 1800. If it is spent by the employee, leave the 1000, keep the 600 alone. It is 600. So that's what one way of remembering. Whatever I tell you is one way of remembering. If you obviously have a better way to remember, You are free to follow whatever way you are following. But ultimately, what we are trying to say is, if it is owned by the employer, that is spent by the employer or reimbursed, it is this ratio. If it is spent by the employee, it is this ratio. Remember, in both the cases, the driver charges is same. It is 900 in both the cases. There is no change in the driver charges. It is 900 in both the cases. Clear? Please remember this. So that's the third category, where the car is owned or hired by the employer, where it is used for both office and personal use. Correct? When it is used only for office, it is not at all a perquisite. When it is used for both office and personal use, we have this rates, whatever is provided in this slide. The next condition is if it is owned by the employee and used for both the uses. So in this slide, we are discussing about both usage. So what if it is owned by the employee and it is used by the both purposes, that is official and personal. As I was telling you, if I own the car and I myself spend, the concept of perquisite does not come at all. But the concept of perquisite comes only when either the car is owned by the employer or it is spent by the employer, that it is maintained by the employer. Now here, when it is owned by the employee and it is used by the, it is actually spent by the employer. So I own the car. As in the example we said, I work in Infoware. If Infoware takes care of my car, though I own the car, Infoware takes care of my car. In that case, what happens? Whatever is the actual expenditure incurred by the employer, whatever is incurred or reimbursed, in that amount, you will have to reduce whatever we studied here. So whatever we studied here must be reduced. I'll just go back one slide earlier. Okay. If the car is owned by the employee, and we are talking about something other than the car. Okay. Other than the car, we are saying actual expenditure minus 900. I forgot to tell you about one thing. Here we are talking about it is actually owned by the employer and it is any other automotive, that is other than car. If I'm giving you something other than a car, let's say a truck or something or whatever it is, if it is owned by the employee and any other automotive other than a car, it could be any automotive. If I'm given, then actual expenditure minus 900. But if it is a car, then what applies? This provision applies. So this provision is take the actual expenditure. So in both cases, it is actual expenditure. But what is the deduction? In the previous case, if it is not a car, it is 900 per month. If it is a car, you follow this provision. Reduce that. So let me give a small flow chart. Owned by employee. Okay. Car, others. So it is a car. The second flowchart variant is other asset. So if it is a other asset, we are telling actual expenditure minus minus what? 900 per month. Okay. Actual expenditure minus 900 per month. If it is a other asset other than the car. What if it is a car? Actual expenditure minus what? Minus, if it is less than or equal to 1600 cc, it is 1800 per month. 1600 becomes 1800. 6 becomes 8. Now, if it is more than 1600, cc, then it is 2400. That is 1800 plus 600. So it becomes 2400. Similarly, if driver is given, if chauffeur is driven, you need to reduce another 900 per month. So this is what you'll have to do when a car is owned by the employee and spent by the employer. Car is owned by the employee and spent by the employer. So remember this flow chart. This will give you a clear picture of what happens when a car is actually owned by the employee. If it is car, if it is other automotive, what happens? So this flowchart will give you a clear picture. I'll of course upload this, both the presentations and this notes what I'm writing. So you can follow this in a recap after this session. So it will help you out. So this is an easy way of a flowchart to remember what happens when a car is owned by the employee and spent by the employer. So that's what we are talking about, right? So this is what we have understood. So now, so we also discussed about what? Owned by the employer and it is used by both the purposes. Owned by the employer and used by both the purposes, wholly personal. Two reasons. Now again, I'll draw another flow chart for this also. I'll draw it in black. Owned by employer. When you say owned, it includes hired. When you say owned, it also includes hired. Correct? Now, 100% personal. Okay. And then both use. And then it is used for both the purposes. 100% personal, it is used for both the purposes. Now, if it is 100% personal, actual expenditure of whatever is being spent by the employer, reduced amount recovered. What is amount recovered? Whatever is recovered from the employee, So that must be reduced if it is 100% personal. What if it is used for both the purposes? We said there are two classifications. I'm sorry, I draw it too long. I said there are two reasons. One is spent or reimbursed by employer. Okay, here spent by employee. Correct. What did we say? More than or less than or equal to 1600. That is 1.66, 1.6 liter engine. 6 becomes what? 6 becomes 8,800. Now, if it is more than 1,600, the 1,800 includes this. You need to add the 600. So it becomes 2,400. Just imagine the numbers flowing in front of you. 6 becomes 8 and 1,800 plus 600 becomes 2,400. Just imagine these numbers. If chauffeur is given, add 900. What if it is spent by the employee? In this case, 1,600, less than or equal to 1,600. Probably I'll write it again. It is less than or equal to 1,600. What it becomes? Leave out the 1,000, keep the 600 alone. Like you remember in Engage, you remember subtraction, hold on to 10 and all those numbers. So similarly, leave out the 1,000, remember the 600 alone. It is 600. What if it is greater than 1,600? 6 turns upside down to 900. 6 turns upside down to 900. Chauffeur, in both cases, it is 900. So these two charts will explain you this entire perquisites of this car on other assets provided to valuation of perquisite. I've kept it simple through this so that you easily remember it. So this is how probably we can easily understand how this is classified. Clear? So this is the valuation of perquisite. So with this I've summarized the entire valuation of perquisite. There are some multiple choice questions based on what we have understood in the earlier session and the current valuation of perquisite. Probably I'll just rush through. I'll not give more time for this MCQs. So we'll move on to the MCQs. So it's basically Rani, wife of Raja. Okay. So we are talking about this lady, Miss Rani, who's wife of this guy, Raja, now who's employed in King Limited. So Rani is an employee in King Limited, went for a bypass surgery in England along with Raja. Expenses on medical treatment and stay outside India. This we discussed in the previous class about medical facility for abroad, right? Medical facility traveling abroad. You can always travel with one attendant and you're restricted. Your expenditure is restricted to a certain level if you are falling with perquisite. So this is what we are. Okay now? Yeah, thank you. So now he's gone for a bypass surgery. What did we say for a bypass surgery? We said in a bypass, it's not about bypass surgery. If it is about traveling abroad for medical facilities, if you're traveling abroad for a medical facility, the employee can travel with one attendant. Employee can travel with employee plus one attendant can travel. There is a limitation to RBI and there is also a restriction to the cost, the total salary of the employee. We said it is restricted to the RBI limit and also the employee's income. Employee's income should be less than 2 income. Employee's income should be less than or equal to 2 lakhs. We set this criteria. So here we are talking about Rani's income is 1.4 lakhs. The total income of Rani is 1.4 lakhs, which is what? Less than 2 lakhs only. So in this case, whatever we are talking about, it says nil, 50,000, 2 lakhs, 5 lakhs. So we'll have to see which is correct. So the total expenditure is 7 lakhs, whereas the RBI limit is 6.5 lakhs. RBI limit is 6.5 lakhs. The travel expenses amounted to 1.5 lakhs. So the total expenditure is 8 lakh 50,000. Correct? The total expenditure is 8,50,000. The travel expenses were completely reimbursed by the employer. So the total expenditure spent by the employer is 8.5 lakhs. Out of this, how much is RBI limit? It is 6.5 lakhs. 6.5 lakhs. So the difference, 2 lakhs will be charged as perquisite. So the answer is not nil, 50,000 or 1.5 lakhs. The answer is 2 lakhs. Because that's what is the difference between the actual expenditure and the RBI limit, correct? So that's what the expenditure amount. So we'll move on to MCQ, the second MCQ, that is Siva is employed in MCS and Co. So he's working in an organization. He earns a salary of 4 lakhs. Fair rent of the unfurnished house. So he is given a house in Mumbai. So for the population in Mumbai, and it is basically it says fair rent of the unfurnished home in Mumbai. So which means the house is actually owned by the employer itself. Only then the fair rent matters. Otherwise, they would have said how much is the employer is paying, how much rent the employer is paying. Here the question says fair rent is actually paid by the unfurnished house. So what happens? It is given to him for 2,60,000. So the valuation of the perquisite of the house will be what? 15% of salary, that is how much? 4 lakhs. So that is 60,000, correct? 60,000 is the 15% of the earned salary. So now it is 60,000 or 2.6 lakh, whichever is lower. So your 15% or fair rent, whichever is lower. So which is lower here? 60,000 is lower. So 60,000 will be considered as the perquisite. 60,000 will be considered as the perquisite in this case. So that is MCQ question number 2. So we'll move on to question number 3. As far as this question say, we are saying Urmila is an employee. Again, she is also an employee of MCS and Co. Now she is earning a salary of 3 lakhs. She is earning a 3 lakhs of salary. Here, rent paid by the employer, which means the employer is actually owning the house. So the rent paid by the employer for unfurnished houses, Mysore, is 5,000 per month. So there is a rent paid by the employer, which is 5,000 per month. The employer charges 3,000 per month. So there is a recovery. Whenever there is a recovery, it must be reduced from the valuation of perquisite. Now, what will be the valuation? So here, 3 lakh is the salary, 60,000 is the rental per annum, 5,000 per month, 60,000, that is 5,000 into 12, correct? So that is 60,000. And rent recovered is 36,000, recovered 9,000 and there is a nil. So we need to calculate. So what happens? the 15% of 3 lakhs. 15% of 3 lakh is 45,000. Okay, 45,000. And this is 60,000. The rent paid. So whichever is lower, correct? Whichever is lower. Now in this 45,000, you'll have to calculate that is there. And then you have recovered is 36,000. So 45,000 minus 36,000, correct? 36,000. So the difference, that is 9,000. 9,000 will be what? Will be the valuation of perquisite. Clear? Okay, we'll move on to question number 4. There is a car, Volkswagen Polo, which is a 1200cc car, is actually provided to me by my employer. So who's giving the car? Who's giving the car? Employer. Remember, each word matters. So the car is provided by employer. Now in this case, when it is provided by the employer, this flow chart applies. This flow chart applies. We'll move on to the next part of the question. I have been earning 20,000 per month. So when a car is provided by employer, to whom all it is applicable? Only to specified employee. Specified employee. It is only applicable to specified employee. So if it is 20,000 per month, it is of course more than 50,000 in a year. So he is a specified employee. Now I use the car both for official and personal purposes. Now what happens when it is used for both for personal and official purposes? We'll have to come here in this chart. Now in this, my employer meets the running expenditure of office use, correct? So if it is whatever is being paid for office use is not a perquisite. Whatever is actually being paid for office use is not a perquisite. What matters is who is actually spending for personal use. Who's spending for personal use? Here it says I meet the expenses for personal use. So when I meet the expenditure for personal use, this table comes. So what happens if it is less than 1,000, more than equal to 1,600? It is 600. Otherwise, it is 900. So what becomes the thing? So it is 600 per month. It is 600 per month into 12 months. So it will be how much? 7,200. It will be 7,200 per month. So the next question, the last question. After this, I'll take some queries and then we'll continue with the session. So we are a company named ARC Private Limited. ARC Limited. So this company is actually providing a car of 1.5cc engine, which is what? Less than or equal to 1,600, correct? To some of its employee. So to some of its employee, we allow the employee to use car for traveling from residence to office and back. What is the word? Residence to office and back. So it is what? So we meet the running and maintenance expenditure. Now, is this required? We meet the running and maintenance expenditure. Is this line important? How do we know? The question says it is for residence to office use alone. So it is what? It is 100% office use. Car is also provided by the employer. In that case, what? It is not at all a perquisite. Why? Because it is exclusively used for office purposes. So the answer is nil. Okay. So I'll just go through some of the questions. Soil Joshi, for more than 1,600 liter cc, yet yes, it is 2,400. If the expenditure is spent by the employer, or reimbursed by the employer. So only in this case only it is 1,600 and 2,400, 1,800 and 2,400. Nega, yeah, I will upload all the questions in BOs. The entire slide and the notes will be there. So you will have the slides there. So that's what it is. So I'm happy that most of you have answered the questions correctly, appropriately. Since we were lagging on time, I could not give you some time to answer the questions. I'm sorry for it. Probably from the next questions, I'll give you some time so that you can take some time to find out the answer, and then I'll get back with the solving the problem. So, right. So with this, we have covered some of the important perquisite things, that is your residential accommodation, medical facility, and car. So this is what is important. So what is important for your exam? What is important for your exams? Residential accommodation, okay, car perquisite, and then medical facility. So these are something very critical for your examination. So now we have covered all these three. So please make sure that you know these three in detail. So that's what it is about: residential accommodation, the car perquisite, and the medical facility. So we have covered this. So we'll move on to the rest of the perquisite. Before moving on to the rest of the perquisite, I'll tell you something for you to understand the rest of the perquisite. A service, okay? I'll write it in red. A service. Sorry, I'll just take one question alone. Akash Neil, do we have to recover the rent paid? Yes, we'll have to recover. As far as residential accommodation is provided, whatever is recovered from the employee must be reduced. If you actually look at the question, I'll just go back to that question. We saw that 3,000 per month is recovered from Urmila. So that's why we have reduced 36,000 from 45,000. So that's why the answer of 9,000 came into picture. So it is 15% from salary and from the rent. Oh, okay. Your question is actually 15. Where from should be reduced? Actually, you will have, the first step is this. So this is step one. Step one is calculate the rent provided by the employer or 15% of salary, whichever is lower. That is step one. From that, reduce whatever is recovered from the employee. So step one, minus recovered from the employee. So only on the net number you are reducing it from the whatever is recovered from the employee. So it is not separately from the rent paid by the employer. So you'll have to find out step one, where your 15% salary or rent paid by the employer, whichever is lower. On that, you will have to reduce the employee's salary. Employees recovered, whatever is recovered. I guess I've answered your question, Akash Neil. So thank you for it. So with this, continuing with whatever we are saying, in the rest of the perquisite, what is very critical is a service provided by employer. Service provided by employer is only for specified employee. So a service provided by employer on their own. So employer says, see, I want you to have a servant. I want you to have a security. So I want you to have a specific service. So in this case, it is exclusively for specified employee. If it is appointed by, if employee says, see, I don't mind whether you give me a servant or not, I myself will keep a servant. Now employer says, I will reimburse for the servant maid kept by you. I will reimburse the servant maid kept by you. I'll reimburse the telephone facility kept by you. In this case, it becomes a perquisite for all employees. Remember this for all the perquisite. If a service is provided by employer, and it is met out by the employer, then it is taxable as perquisite only in case of specified employee. If employee is actually keeping the service which is reimbursed by the employer, in that case, it is taxable as a perquisite for all employees, Clear? So that's what it is important. So with this base understanding, we'll move on to the other areas of perquisite. So we'll start with domestic servant. Okay. So what is domestic servant? I need not explain you what is a domestic servant. Someone to help on your home needs, cleaning, washing, right? So that's what you call as a domestic servant. Someone to support you for your home needs. So now, in this case, what is the taxability? What is the taxability in case of perquisite? As I told you, it is taxable as perquisite for all employees if it is engaged by employee. Okay, if it is only engaged by the employer, then it is only taxable in case of specified employee. Clear? So this taxability scenario is common across the valuation of perquisite, from now onwards, including the car also. But anyways, we have already discussed car, so I do not want to confuse a little more. So from now onwards, from this provision onwards, please remember, if a service is provided by the employer, it is taxable only in case of specified employee. If it is a service engaged by the employee and spent by the employer, then it is taxable in case of all employee. Clear? Keep this in mind across the valuation of perquisite from now onwards, from this slide onwards. Okay. Now, what do you mean by domestic servant? I already told you that I no need to explain you about this. So it includes sweeper, gardener, watchman, personal attendant, etc. So it even includes personal attendant, that is a PA. So they need not actually wash, clean or something. Even if they are there to do you some activity like your your Alexa, your Google. Nowadays, these are also called personal assistant, right? But of course, you don't pay them anything. They do it out of their own interest. Just that you'll have to do a one-time cost. So whatever we are talking about as personal assistant is not these digital personal assistant. Whatever we are talking is the personal assistant that you have a human being to whom you actually pay them the money as a personal assistant. So for them, a sweeper, gardener, whatever we are talking about is not digital services, it is human services. So these human services, if it is being paid by the employer, so this case will be covered as a perquisite. Now, what actually is the perquisite? Now I'm going to make your life simple. After confusing you in all this residential, medical and all those things, I'm going to try to keep it as simple as possible. So wherever it is actually spent by the employer, you take the actual cost. To the employer. What will be the actual cost? If the salary of that personal assistant, the PA, is 5,000 per month, that is the actual cost. If the cost of the gardener is 1,500 per month, that is the actual cost, correct? So that's what it is. Whatever is recovered needs to be reduced. Only in case of car, valuation of car, where we are talking about this engine capacity and all, only there you don't reduce even if you recover something from the employee. Only there you don't reduce anything even if you recover something from the employee. In every other case, whatever is recovered from the employee must be reduced. So what is the valuation of perquisite? Actual cost to the employer minus amount paid by the employee. Very simple, right? So please remember this. In car also we said this, right? Actual cost to the employer minus amount paid by the employee. Correct? So this is very simple. So whenever a service is provided to the employee, you take the actual cost minus employee. Only in the car we have that rate. So in every other service, probably what we are going to see from now onwards, you will remember this. So this will be a common understanding. So keep this in mind. Actual cost to the employer minus amount recovered from the employee. Correct? So keep this in mind. So can we do a small problem to understand this better? So illustration number 19. The number of illustration that which I am quoting is the number of the illustration in your study material. I am not changing the numbers also. I'm just keeping the same numbers. So this is the exact problem which is there in your study material. That is illustration 19. What is the illustration? There are two persons, Mr. X, Mr. Y, two persons who are working for Gamma Limited, So as far the salary goes, the following perquisites are being provided to X and Y. What are the perquisites? Mr. X, who's engaged a domestic servant. What is the word? X engaged. Correct? X engaged. So what does it mean? Employee has engaged the domestic servant. So the perquisite is taxable for all employees. So you need not bother whether this person, Mr. X, is a specified employee or not. You need not bother about it. You need not do a calculation to understand whether he is a specified employee or not. You can save your time. Okay, that's a better word, right? You can save your time to not know whether he is a specified employee or not, because the domestic servant is engaged by the employee himself. So how much is the paid? He's paying 500 per month. So cheap labor, right? He's only paying 500 per month to a domestic servant. His employer reimbursed the entire salary paid to the domestic servant. Now he is actually receiving 500 per month. He is paying 500 per month. Now this 500 is also reimbursed by the employer. So the employer is actually reimbursing the entire 500. Okay, so that's what it is about. So that is for X. Now what does it tells you for Y? It says Y, employer provided domestic servant. So it is only applicable for specified employee. Clear? It is only applicable for specified employee because it is only applicable with respect to employer is being provided as domestic servant. So it is only applicable to a specified employee. It is same 500. So employer is directly paying it. So employer is directly paying that 500 to the. Now the question is about what about the taxability of X and Y with regarding to this perquisite if they are not a specified employee. So what it is about? Correct. So Nega, it is correct. Mr. X will be taxable as perquisite because it is taxable for all employees. So when you say X is taxable, what is it for Y? For Y, it is not taxable. It is not taxable as a perquisite. So in this case, it will not be taxable to Y. As far as X goes, it becomes taxable. So that's the answer. So for X, it is taxable. So what can we write? We can say X. In the case of X, X has appointed the domestic servant. So since it is engaged by the employee and reimbursed by the employer, it becomes a taxable perquisite for all employees, irrespective of whether the employee is a specified employee or not a specified employee. Hence, considering that in the case of Mr. X, it is a taxable perquisite. So similarly, what about Y? You say in case of Mr. Y, since the domestic servant is engaged by the employer, in this case, it is taxable only in the case of specified employee. Considering that Mr. Y is not a specified employee, it is not a perquisite in case of Mr. Y. So this is the answer that you are going to provide it with respect to this particular question. Clear? So this is what it is about. Clear about this? Yeah. Karthik, you are right with the amount also. So it is 6,000 because it is 500 per month into 12. So yeah, good Nega, Akash, Neil and Karthik. So all of you have answered it perfectly. Very good. Pooja, what do you mean by specified employee? Probably I'll give back so that because it becomes easy. There are three categories of employees who will be called as specified employee. One, I'll write it in black so that it's a different thing. One, a director. Okay. One, a director of thing. One, shareholder. Okay. Shareholder. who owns more than 20% voting rights. So that is what? Equity share. Only equity share has the voting rights. So you must own more than 20% of equity shares in that organization. Third is your salary is greater than 50,000 per annum. So these are the people who will be called as specified employee. These are the persons who will be called as specified employee. Correct? So yeah, Alok Chaudhary, so you have also answered it correct. So Y is not a specified employee, hence it is not taxable in case of Y. So good that you're all participating in the illustrations that I'm actually giving it to you, because it makes it easy for you to refresh the provisions. We have just understood the provision on the left hand side. We are solving an illustration on the right hand side. So when you're immediately refreshing, what does it happen in your memory? So your brain says it helps you remember it for a longer time, longer than your examination. Please remember, longer than your examination. So it's lifetime thing. So it will help you remember for a longer time, since you're immediately refreshing, recollecting to whatever we have actually learned it right now. So good that you're all participating. So we'll move on to the next slide. So in this case, we are going to cover about gas, electricity, and water supply. Gas, electricity, and water supply. So these are certain supplies, the home supplies that is being provided, necessary supplies, so gas, electricity, and water supply. Correct? It's very important. So we spoke about rent. We spoke about this domestic servant and all. Now we are coming to the basic supplies, gas, electricity, and water supply. So now what does it say? Should I repeat? I don't think it is required to tell you about this area, right? Why? Why is it not required? Because it's going to be the same. I need to repeat you the same thing. What should I repeat? If it is provided by the employer, then it is taxable only in the case of specified employee. If it is engaged by the employee, then it is taxable for all employees. But here, the same concept, but I've used a different word. Same concept, different word. So when I say engaged by the employer, what does it mean? It is in my name. That is employer. I am the employer here. So when I say engaged by the employer, I'm saying it is in my name. It is in my name. So that's what it says, name of the employer, which is equal to engaged by employer. So I'm not telling you a new rule. I'm not telling you an additional thing to be remembered in your brain. I'm not giving you extra information for your brain. I'm telling you the same information with a different word. So don't get confused. I'm just saying it is provided by the employer. Why am I saying it is provided by the employer? Because it is the bill connection. The connection is in the employer's name. So then it is called as name of the employer. If I myself, that is the employee himself, is engaging the connection, what does it mean? It is in his name, correct? It is in his name. So that's why you call name here. So I'm not giving you a new information to your brain. I am just telling you the same information with different word. Clear? Please remember that. So what do you mean by these provision? As I told you, it is gas, electricity, water. Gas, electricity, water. Now for perquisite. There are two classification. One, the company, let's say Bharat Gas. We'll take an example as Bharat Gas. Because I have a connection in Bharat Gas, so let me associate myself with Bharat Gas. So that's how you remember, right? So if you have a connection in Indian, you take example as Indian. Only then you will remember. Now in this case, Bharat Gas, what are we saying? I am an employee of Bharat Gas. Okay. Now what I'm saying? I am an employee of Bharat Gas. Okay. I am an employee of Bharat Gas. So in this case, Bharat Gas is giving me a gas connection. Okay. Now, in this case, what happens is the manufacturing cost. So when I say cost, I'm talking about the manufacturing cost. The manufacturing cost of that Bharat Gas. If you have taken example as Indian, then the manufacturing cost of Indian, correct? So now, what if I am not an employee of Bharat Gas, but my employer employer is giving me a connection of Bharat Gas. Okay. Let's say I am some stranger. Okay, I am some stranger. Now, what is the case? Whatever is paid by employer minus recovered. What did I say in the previous slide? The provision, the cost remains same. Perquisite valuation remains same. What is it? I told you to remember this, correct? That's actually a star, okay, to say that it's important. I've always told you that my handwriting is very poor, so I'm really sorry. So that's actually an asterisk, what do you call asterisk? So it's important. So this valuation will continue for rest of the slide. So that's what I'm telling you right now also. So if it is actually owned by the employer, that is if the gas connection is owned by the employer, if that's like employee of Bharat Gas, then manufacturing cost minus recovered from employee. Now, if it is not owned by, if it's not a company, if he is not, the employer is not owning the gas connection, then what happens? The actual cost incurred by the employer. The gas values keeps changing. So I don't know what is the value of gas cylinder per now. Let's say it is 1,000 rupees. So now this 1,000 rupees per gas cylinder, let's say monthly one gas. So now, let's say gas cylinder is 1,000 per month. The company, let's take company as Info Wave. Okay. Now company pays to agency of Bharat Gas. So this 1,000 is the cost, correct? Let's say recovered is 600 per month. Now what becomes the perquisite? Perquisite is becoming 1,000 minus 600. So how much? Simple max, right? 1,000 minus 600, 400. Does it look like 4? I doubt myself, right? So I'll probably write better. 400, correct? So it is 400. So 400 becomes the perquisite valuation, correct? So 400 will be the valuation of perquisite if it is company is Infowave, agency is Bharat Gas. If company is Bharat Gas, we'll use black. If company is Bharat Gas, what happens? Manufacturing cost. Let's say it is actually sold for 1,000, but manufacturing cost is 800. Okay, manufacturing cost is 800. It is sold for 1,000, but manufacturing cost is 800 minus recovered. How much are we recovering? 600, right? So what happens? Perquisite valuation is 200. So now in this case, the perquisite valuation becomes 200. So when it is owned by the employer, we don't have that classification for domestic servant. Why? Why? Because I cannot be a domestic servant and be an employer. So I cannot be there. I cannot do that. So that is why we are not calling it as owned by employer for domestic servant. There is no possibility. So that's why we are saying owned by employer. Clear? Understood? Okay. Next valuation. So next valuation is we have two things here. One is free or concessional tickets. Tickets is the one thing. Another is loan. I've used a very sweet thing. FB. What you all know for FB? I'm very sure what. FB stands for what? We all know what? Facebook. Correct? So that's what all we know for FB. But here we are going to use it for fringe benefit. Fringe benefit. So in income tax, FB stands for fringe benefit. What is fringe benefit? Just like that, some small services, some small benefits I'm giving to the employee. As an employer, very small services, very basic needs or requirement, I'm giving it to an employer. So some additional benefit given to employer. Certain services are called as fringe benefit. Of course, you need not know what is fringe benefit, what is other than fringe benefit. Basically, a fringe benefit is an additional benefit given to an employer in the form of perquisites. So certain things which are actually called as fringe benefit in your study material, I've used this acronym, I've used this short form called FB, which stands for fringe benefit. Fringe benefit. Okay, fringe benefit. So now we'll first understand the left hand side. What is free or concessional ticket? So what is it? If an employer is engaged in carriage of passengers or goods. So I am in the business of providing passenger or goods. I am in the providing business of passenger or goods. So let's say I'm a transport company. So the ticket I'm referring to here is what ticket? Travel tickets. So I am a company running a travel business. So it is only for them, it is applicable as a perquisite. So what am I doing? I am giving free tickets, free or concessional tickets to employee of family member. So for family members, I'm giving either free or concession. It's like free, right? Completely free or some concession. For what? Personal journey. So here what I'm saying is personal journey. I'm not saying, probably we can replace this word, right? So that makes more meaningful. Family member of employee. So we'll keep it this way, okay? So we'll replace the word here and there. It is family members of the employee. So what are the family members doing? They're going on a personal journey for which they are either giving, the company is giving free or concessional fare. Correct? In any conveyance, they are giving you this thing. So that's what we are doing it about. That's what we are calling it as benefit to this particular scenario. So it is about any conveyance owned, leased, or made available in any other arrangement. Owned, leased, or any other arrangement in that case. So that's the benefit. So what are they doing? Either the benefit is owned by them or leased by them, or it is made available to them in any arrangement. So here, whatever value offered to public, what do you call? It is something like manufacturing cost. In travel, you are talking called as cost offered to public, or will not use this term. I'll just take back my word. So it is cost offered to public. So it's something like this, right? Whatever is offered to public, gas was offered to public at 1,000 per month. So that is what is taken. So whatever is cost offered to public is taken, not the cost, manufacturing cost or service cost, not the service cost. Whatever is value offered to public is taken, recovered from employee. Whatever is recovered, as I told you, cost minus recovered. There is no change in the formula. Cost minus recovered. There is a small additional benefit given to airline or railway employee. So we'll take a person as an, so let's say you are an employee of IRCTC. So that is the railways, right? It's IRCTC. So if a free or concessional ticket is provided to an employee of IRCTC and their family members, it is not a perquisite. It is not a perquisite. Please remember, it is not a perquisite for employees in airline or railway employees. So for them, whatever concessional tickets, free or concessional, is provided to the employee, family members of the employee for a personal journey is not a perquisite. We are only talking about other forms of transport. So probably road, ship, or whatever it is. Only for other forms of transport, we are saying whatever cost offered to public. Let's say I'm traveling from Chennai to Mumbai. Whatever is the cost offered for journey between Chennai to Mumbai to public, minus whatever is recovered. So that's what is the valuation of perquisite in case of free or concessional ticket. Clear? So with this, before discussing this interest on free or concession loan, we'll take a short break and come back. We'll take a short break and come back to the session. 10-minute break, okay? So we'll meet back after 10 minutes. Thank you. Yeah, you can start the break.
Yeah. So yeah, welcome back. Sorry. So we have just discussed about the concessional, free or concessional tickets with respect to your transport businesses. So an airline employee, railway employee, we said it's not taxable. For other employees, we said whatever is the cost charged to public minus recovered. So that's what it is about. The next one is interest-free or concession loan. So here we are going to talk about again free or concession with respect to loan provided to an employee. So there is a loan amount provided to an employee on which there is no interest or there is concessional interest. So what do you mean by concessional interest? Let's say typically if I get this loan from a bank, it might be 15%, but here I'm giving it at 8%. So this is a concession, right? So this concession is what we are talking about. So typically loan is provided to employee or can also be to the family member. So whenever I'm saying family member, it is a spouse, children. So here we are not talking about dependent children and all. As we said earlier in residential accommodation itself, children refers to dependent, not dependent, married, unmarried. So in all these cases, we are talking about a family member. And it's also parents. And apart from these, spouse, children, and parent, for everyone else, that is brother, sister, or whoever it is, if they are dependent, they become a family member. If they are dependent, they become a family member. So loan is provided to the employee or to the family member. So it is provided by the employer himself. So it is directly provided by the employer or provided by someone else. Let's say I request HDFC Bank to give a loan to my employee. Correct? So that could also be there. So any person on behalf of the employer. So that's the next category. So that's about the benefit, a loan to employee or family member provided by employer or any person on his behalf. So that's the first thing. So what will be the perquisite? What is generally it is cost to the employer or cost charged to the public or manufacturing cost, all these things, right? Let's now take this word cost offered to public. So now to understand this, what is the interest rate offered to general public? Okay, what is generally the interest rate for a loan provided to a public? To take this benchmark, we are taking the interest rate on 1st April of the previous year. So if you are talking about previous year 21-22, what date? Very easy question, right? So if you are talking about previous year 2021-2022, which is applicable for your exam, the first date of 1st April of that year is what? 1st April 2021. So on that date, what is the rate charged by SBI? So what is SBI? State Bank of India. So what is the charged by SBI calculated on maximum outstanding monthly balance? What do you mean by maximum outstanding monthly balance? You will have various clients, right? So SBI will have various customers. So you take the maximum outstanding of a particular customer. So what you take the maximum outstanding and bring out what was the interest rate charged on that particular scenario. Correct? So you take that interest rate. Now, if you wanted to understand how do I actually calculate maximum understanding, what is monthly balance? I will simply say you need not worry about it. Your question paper will specifically say the rate charged by SBI. It will not ask you to calculate maximum outstanding or monthly balance and all. It will only ask you to, it will only give you the rate as far as the SBI is concerned. So you need not worry about the term maximum outstanding or monthly balance. Simply for time saving purposes. So this rate charged by SBI on 1st April of the previous year will be your the interest rate. So you apply that interest rate. You apply that interest rate. So you apply that interest on maximum outstanding. We'll have to understand what exactly on which it has to be applied. So SBI rate will be provided by the income tax. So we need to calculate this maximum outstanding amount. So what is maximum outstanding? April is 1 lakh. Okay. May, June. I'll just write just 4 months for purposes alone. Now, if May month is, it is 90,000, 80,000. 70,000. So the highest maximum outstanding balance is the 1 lakh. So the rate will be calculated on this maximum outstanding balance. So on that month, you calculate that interest rate, calculate it for the whole year, and then reduce whatever is actually recovered from the employee. So this is what it is about. So you you pick the SBA rate, you apply it on the maximum outstanding monthly balance, reduce it from the whatever you from the employee. So if you are actually recovered 6%, you have recovered some interest, you reduce that. So this will be your calculation. And in some cases, this is not a perquisite. In what cases it is not a perquisite? If it is a medical treatment for prescribed disease. So your question paper will say whether it is a prescribed disease or not. So if there is some prescribed disease, generally related to certain brain or heart related diseases, which will be prescribed. If it is a prescribed disease, then for that, if you are actually borrowing a loan, so there are sections which we will discover, we'll study later, which is talking about this prescribed diseases. So if it is about that, then that loan is not actually considered for this valuation of perquisite. Similarly, if the entire loan amount itself is less than 20,000, then also it is not considered as a perquisite. In these two scenarios, it is not a perquisite. Clear? So to repeat, any interest-free or concession loan provided by the employer or a person on behalf of the employer is a perquisite. It is not a perquisite if such loan is provided, which is less than 20,000, or it is for a prescribed disease, medical treatment of a prescribed disease. Then it is not a perquisite at all. In case if it is a perquisite, you take the SBA rate on 1st April previous year, which will be calculated on the loan balances. So you calculate monthly, every month. So April into that rate. Okay, this interest. So this 1 lakh should be the maximum balance. You calculate it on monthly. We'll see this in an illustration to get a better understanding. So every month, that month's maximum outstanding. On that, you'll have to calculate this rate. So for every month, you calculate this and then arrive at a total. Okay, so that's how you'll have to do. So in April, it is 1 lakh. In May, it is 90, 80, 70. So you'll have to take the maximum balance in each of the months. So on that only, you'll have to apply that and bring out the total. So please remember, we'll solve a problem to understand this in specific about this interest-free loan. So traveling, touring, and accommodation. So we'll solve a problem in a couple of slides later. So for time being, we'll move on to the next slide. So what it is about traveling, touring, and accommodation. We already saw about free or concessional ticket, but here we are talking about this a much broader level. It also includes accommodation, a tour, a private travel, vacation, okay? Something like vacation. So this is also fringe benefit. So here, what does it say? There are categories. If the expense is actually met by employer, please remember, this is not leave travel concession. This is not leave travel concession. Leave travel concession, which is 2 years in 4-year block. 4-year block is a different provision, leave travel concession. Here we are talking something other than leave travel concession. So if the expense is met or reimbursed by employer, then other than LTC, what will be? It is the actual amount of expenditure. So whatever is provided by the employer will be considered as the perquisite. Facilities maintained by the employer. Let's say a company is in that business. They provide accommodation. They provide travel. If they are in that business, then value of facilities, such facilities offered by other agencies. So if a competition, whatever is being provided by the competition to the public will be taken as the value. If it is expense on a family member accompanying on office tour. So here we are not talking about personal vacation. We are talking about office tour where along with the employee, a person is traveling. So let's say a spouse is traveling, then what is it? Actual amount of expenditure spent for that person, that one person, whoever is traveling on the office tour. So whoever is accompanying on the office tour. So that's what we are talking about. So whatever we are talking about is vacation. Sometimes what happens is you go on an office tour. Let's say you go on an office tour for 4 days. You extend that office tour as a vacation for another 3 days. you spend that 3 days in that city or country and then come back. So office tour extended as vacation. If that is the case, the expenses is only limited to such extended period. So it's not the total cost, it is a cost only for the extended period, which is being converted into a vacation. So these are the conditions with respect to traveling. So what are the situations? One is it is reimbursed by employer, whatever is the actual amount. If the facilities is actually maintained by the employer, you don't take the actual amount, you take the amount which is offered by the competition. If you're spending for a family member on office tour, whatever is the actual amount is considered. And whenever you're saying about a mix of office and vacation, treat the cost of vacation alone as perquisite, not the entire cost. So that's what it is about. So this is about your traveling, touring, and accommodation. So there are 4 situations which we spoke about treating traveling, touring, and accommodation, which is also FB, that is your fringe benefit. Next is free or concessional food. Free or concessional food. So what is free or concessional food? It's basically what? Providing food during office hours or something. So when is it a perquisite? We'll first understand when it is not a perquisite. So it becomes easy, right? When you know it is not a perquisite, it becomes easy. So the situation when it is not a perquisite is when free food provided by employer. See the keywords: free food provided by employer during working hours, that is during office hours. So it could be provided in the office during office hours, or it could be vouchers. Hope you all would have heard about various food vouchers, something like Sodexo, a ticket restaurant. So these are called food vouchers. I have heard some companies give Zomato vouchers also. So it is easy for you to, these days we all order in Zomato, Swiggy only, right? Most of the time. So you were given a voucher through Zomato, Swiggy. So it's right, it's easy, right? So you have a voucher in Zomato, you just apply it when you're placing an order. So it is not, it is generally during working hours. It will also include paid as vouchers. Whatever is being provided as voucher is also included. So now, this is not a perquisite. This is not a perquisite if it is less than 50 per meal, less than or equal to 50 per meal. Please understand, this is not a perquisite if it is provided during working hours or voucher, considering that it is less than 50 per meal, then it is not a perquisite. And this clause is not applicable if you have opted for 115 BAC. You would have already seen that in the tax rates, right? There is a new slab rate when you can opt that new slab rate. So if you're opting for the new slab rate under 115 BAC, in that case, irrespective of when that meal is provided, irrespective of the value, irrespective of whether it is voucher or not, it becomes a perquisite. So if you have opted for 115 BAC, this is not applicable. Okay, if you are opted for 115 BAC, that's why we are saying it is taxable if you have opted for 115 BAC. Next, what is not a perquisite? You are given a tea at 11 o'clock in the morning. Let's say you're also given a snacks. We do it in our office and all. We give tea in the morning at 11 o'clock. And then around 4:30 in the evening, we give some snacks and again tea or coffee. So this is not a perquisite. Why? This is generally to help you work better, give you some coffee to boost your caffeine energy, right? So to boost your energy, we give you coffee or tea to keep you awake during the office hours. So in that cases, whatever is being provided as tea or snacks during working hours is not a perquisite. This is irrespective of whether you opt for 115 BAC or not. The last one is free food during working hours in a remote access. Let's say you're not working in your usual place, you're working somewhere from remote location where everything is not easily accessible. You don't get food that easily or whatever it is. So free food during working hours in remote locations is also not a perquisite. This is also irrespective of whether you have opted for 115 BAC or not. Clear? So these are the situations where it is not a perquisite. 3 situations. What are they? Free food provided by employer during working hours or vouchers, paid as vouchers, if it is less than or equal to 50 per meal. And second is tea or snacks during working hours. Third is any food provided, free food provided during working hours for remote access location. So these are the three situations where it is not a perquisite. In case if it is a perquisite, whatever is the cost of the food, that is whatever is being spent by the employer minus recovered from employee. It's the same formula, same old formula, whichever we are talking about this particular situation. So whatever we are talking about is this situation is, as far as this provision goes, it is straight away applicable. So that is with respect to this situation. Next thing, gift voucher or something. What is it called? In this case, we are talking about a gift voucher or a token in lieu of such gift. So what is it we are talking about here? So here we are saying value received by the employee. Value received by the employee or family member from employer. So that's what you are talking about. So here, what are you actually referring to? You are actually referring to as so you are actually referring to this situation where you are calling it as what? Here we are saying that gift voucher or token is provided to such gift. What is it provided? Value received by the employee. So whatever is received by the employee becomes your perquisite. It is not a perquisite if that gift is less than 5,000. So in a year, if the gift is actually provided to the employee or the family member for less than 5,000, then it is not a perquisite. So that's what we are referring to. And similarly, credit card expense or club expense. So here also we'll first understand what it is not a perquisite. So what is not a perquisite? If it is exclusively for office purpose, it is not perquisite. To prove that, complete detail should be maintained. Employer must give a certificate. Of that particular thing. So that is also important. Employer must actually give a certificate. And it does not include corporate membership fee. So whatever is given to join in a particular club, that initial club fee is not a perquisite, because it is for the corporate, not for the employee. If tomorrow this employee leaves, another employee comes, that membership still remains, right? So it is not for the employee, it is for the corporate membership. So that initial fee is not a perquisite. And similarly, if it is for health club, sports, or similar facilities, uniformly to all employees. Let's say it is paid to a gym for all employees, free to use gym. That is not a perquisite. So that's what it is about. So otherwise, whatever is the expense, including membership by employer or a family member in a credit card. So whatever is being spent by in the credit card minus recovered. So spent through the credit card minus recovered. So similarly, if it's a club fee, whatever is paid to the club minus recovered. So actual cost paid through the credit card or paid to the club is the actual cost minus recovered. Clear? So that's what it is about. So the next thing is use of movable assets. So probably I'll see if there are some questions. So yeah, so even if it is below ₹50, Karthik, this is not been clearly provided in the Income Tax Act. So even so, what the law says is value equal to less than 50 per meal is not a perquisite. So now Income Tax Act does not say if it is 60, whether 60 is also perquisite or 60 minus 50 is perquisite. Income tax doesn't give a clarity on this. So typically for exam purpose, we can take a stand. So you can either say anything above 50 is taxable. If it is 60, 60 is also perquisite. This can be done. Or you can, in the question paper, you can say that up to 50 it is exempt. So 60 minus 50. My personal suggestion would be treat the entire 60 as perquisite. Up to 50 it is not a perquisite. Above 50 it is a perquisite. So that's what the provision is. So my suggestion is the meal value is 60, the entire 60 is a perquisite. I would suggest you take that stand. Same applies for gift also, Somesh. So for gift also, If it is above 5,000, the entire amount is taxable. If you have actually received gift as 10,000, treat 10,000 as taxable, and probably give a note saying that you have treated the entire amount as taxable because it is more than 5,000, because it is more than 50. Say that in the note as a reference so that it will be very clear. So that's what it is about. So we'll move on to the thing. So next is use of movable asset. So use of movable asset, what are we saying? We are talking about perquisite. So we are saying perquisite is owned by employer. So first thing is, we'll also understand what is not a perquisite. So it is a laptop or a computer. Use of laptop or a computer and computer is not a perquisite. So if today everyone is provided with a laptop or a computer in their office, right? So basically, usage of laptop or computer is not a perquisite. Any other asset other than whatever we have discussed in valuation of automotives, running car and other things, apart from that, anything else, if it is owned by employer, it is 10% of actual cost. That is wear and tear. If it is hired, whatever is higher charges. Whatever is recovered needs to be reduced. So there is no different rule. The actual cost, which is hired or 10% will be considered as a cost minus recovered. What if it is transferred, that is sold? What if it is sold? If it is sold, depreciated value minus paid by employee, that is recovered. The word is different. Paid by employee, it is nothing but recovered. So the depreciated value minus recovered. So what is depreciated value? If it is a computer, the rate of depreciation is 50% on WDV. 50% on WDV method. Similarly, if it is car, it is 20% on WDV. If it is any other asset, it is 10% on SLM. So please remember, on computer and motor car, it is WDV, 50-20. If it is any other asset, it is 10. If it is 10% on straight line method. So you calculate the written down value method. On that, you reduce whatever has been recovered from the employee and treat it as a thing. So that's what it is about. And finally, any other benefit provided by the employer, shall be determined on the basis of cost to employer under arm's length transaction as reduced in employee contribution. So what is it actually? So any other benefit, that is apart from whatever we have seen so now, valuation of domestic servant, gas, electricity supply, interest-free loan, your travel, vacation, apart from all whatever we have discussed, apart from this, if there is anything extra, you will have to treat the cost, whatever is the cost of that service. How do you arrive at the cost? They call it as arm's length transaction. Let's not confuse the word arm's length in your intermediate. We'll just use the word as market value. Market value is something which is available to a general public, the fair market value. So we'll identify what is generally provided to a public, that cost minus recovered. So arm's length transaction refers to market value. This is what you need to keep in mind for intermediate. You have a lot more explanation to this term when you come to final few months later. But for time being in intermediate, till you complete, till you finish off clear in this November 22 exam, the word arm's length, what should you remember? You should remember it as market value. For any other benefit, apart from whatever we have discussed in this across the slides, it refers to market value. Clear? So this is all about valuation of perquisite. So we have covered all the valuations of perquisite. We'll move on to the next thing. So I'll just answer just a question that has come before we move on to this. It's from Nega. The question is basically why this more than 50 or more than 5,000 is basically not clarified or something. So basically, it is always an act, right? So every act, whenever you have a provision, there might be some misinterpretations or different interpretations. You might get two different meanings for the same provision. Sometimes judicial proceedings, the court answer certain things. But as far as act goes, your intermediate goes, you don't have judicial precedents and all. So without judicial precedents, whatever is interpretation taken from the Income Tax Act, there might be a scenario where you might have two different meanings for the same thing. So in that case, what I suggest is go by the plain reading. Go by the plain reading and take the anything above that 50 or 5,000 as taxable. So there might not be clarity in certain things because it's an act. So there might be a situation where there are different interpretation. You cannot expect a complete clarity for all the specific provisions. Pooja, where we have given a laptop, we must possess and enjoy its benefits. So we actually have a right to transfer those. See, we are talking about transfer from the company to the employee. It's not a right and all. There is no right for you to own that laptop because that laptop is purely for office purposes. It's not for personal purposes. When you are saying it is being sold, now you are given the right for personal usage also. So which means, so what I mean to say is, whenever it's a laptop, there is no base right. You might be given an option by your company saying that you yourself can take the laptop. So it's not a basic right. It is just that some company might give you that option. Mukta, am I saying whether arm's length and market value are same? Definitely not. I'm not saying arm's length and market value are exactly same. It is more or less same. So it is like two different concepts. It's almost the same concept, but probably I'll put it this way. Yes, it is the same concept. Arm's length is a market value, but how you determine that market value, there are methodologies. That's where the concept arm's length come into the picture. When there is no methodology, it is market value. When there are methodologies, probably you can call it as arm's length. So I'm not saying arm's length and market value are same. I'm trying to say for intermediate, just remember the word market value as a replacement of arm's length price. I guess we'll stop it here for your benefit because otherwise you will be the one who will get confused. So as far as intermediate goes, what should you remember? Arm's length and market value are exactly same. We'll stop it there. Ayush Agarwal, why annual charges of credit card are perquisite when the card is only used for official purposes? See, basically what we are trying to say is, as far as this card goes, we are saying that if it is completely, it is wholly and exclusive for office, it is not a perquisite at all. We are saying it is not at all a perquisite. In that case, nothing is chargeable to perquisite. We are only talking about perquisite when it is also used for personal usage. So we are not talking about exclusive office usage. So Ayush, whatever we are talking about is, if the card is used for wholly for official purpose, it is not a perquisite. Some of you are again asking me to explain about market value. Let me tell you what market value is. If today you wanted to buy a Android phone, let's say some Redmi Note, what is the latest? Redmi Note 12 or something. You go to some mobile shop, let's say Chroma. You go to Chroma, Reliance Digital, and say them, I need a Reliance Digital phone. Redmi Note 12. What is the price? That price is market value. Okay, so that price is when you go to a random shop, request for a particular product, whatever is the price is called market value. Which type of perquisite is more important? I already wrote. Some of you also asked me to write one more thing. So it's basically what? It is residential accommodation. Second, you have medical facility. Third, you have education facility. Fourth is car. So these are the most important. Apart from this, anything else related to this benefits, domestic servant and all those things might be questioned. But these are more important. So these are more important. As I told you, that is asterisk. So please forget my whatever I'm saying. When it comes to transfer of asset, it is irrelevant whether it is for personal or office use. Transfer is a transfer. So there the concept of office or personal does not come. So whenever we are talking about transfer, it is irrelevant. What is irrelevant? Office or personal is irrelevant if it is relating to your, what is it? It is about this, when it's a transfer of asset. So we'll stop here. We'll move on to this question. So this question is basically about a person called Zagir. He is retired from service. from ICCB Limited on 31st January 2022 after completing service of 30 years and 1 month. So he had joined the company on 1st January 1992 at the age of 30 years, and received the following on his retirement. What has he received? Gratuity, leave encashment. As per the scheme of company, he was offered a car which was purchased on 30th January 2016 by the company. Company has recovered. So it's a transfer of movable asset from him for the car. Company depreciate the vehicles at the rate of 15% on straight line method. That is the rate adopted by company. We need to see whether that is relevant or not relevant for income tax purposes. An amount of 3 lakh as computation for pension. 2/3 of his pension is commuted. Company presented him a gift voucher worth rupees 6,000, and colleagues also gifted worth rupees 50,000 from their own contribution. Following are the other particulars: drawn salary of 20,000, 50% is dearness allowance, that is 10,000 is dearness allowance from the period April 2021 to January 2022. That is for the entire period that is reckoned. He has received pension from 1st February 2022, that is immediately after retirement, to 31st March 2022 after commutation of pension. After commutation of pension, he is receiving that. Now they wanted to compute gross total income, assume that he has not opted for 115 BSc. So that's the provision. So what is the question here about? It talks about whatever Jagir is receiving here on various periods from his entire period of receipt. Correct? So this is where we are going to solve. So we'll start with the problem. So we'll say computation of gross total income. Okay, gross total income of Mr. Jagir for assessment year 2022-23. Correct? So this is the right. So here you write particulars. Particulars. Always have 2 amount columns for your betterment and 1 reference column. Always maintain this. Okay, always maintain this. Always maintain this so that it helps you. So this is where you start. Okay, so you can draw this. Keep this as a basic structure for every problem of yours. So now where do we start? The question talks about salary. So for salary computation, you'll have to basically compute the first things, that is your salary, dearness allowance, if you have commission, bonus, all those basic things, right? Section 15, 17.1, where we talk about salaries. 17, clause 1 talks about salaries. So what are salaries, wages, everything about wages? That's the first thing. So we are going to talk about wages. So what is about wages? The wages incurs about your what? Basic salary. So first you start with basic salary. So what is the basic salary? In the question, we said 20,000 per month. Okay, 20,000 per month. Okay, and dearness allowance of 50%. So from 31st January 2022, he is getting a thing of 50%. So till January, April to January, how many months? April to January, total year has 12 months. You're leaving out February and March. So you're leaving out 2 months. So the total months is 10. So you write 20,000 into 10. 20,000 into 10. That is 2 lakhs. Next, dearness allowance. Dearness allowance. How much is it? 50%. So it is 1 lakh. So that is what is about. Now this is the first thing. Then we'll have to go to your next sections. That is whatever is about your the gratuity, pension, all that comes next. Leave, encashment, gratuity, and pension. So we'll first start with gratuity. gratuity, then leave encashment, then what? Next is pension. For this, we need to do a working, right? We need to calculate how much is actually taxable. So you write 1, 2, 3, 3 workings. So we'll just go to the next page, right here as working notes. Working notes, right? So the first thing that we are going to talk about is gratuity. So whatever is gratuity, we take about whatever is what. First, we need to calculate what? We need to calculate how much of gratuity is taxable. For that, we need to understand the least of the following. So first is gratuity received. So you take this less exempt. So to know the exempt, you first calculate received. What is actually received? What is actually received? The question says gratuity of 6 lakhs is received. So you take this 6 lakhs. So 6 lakh is received. Here also you take 6 lakhs. The second is limit. What is the limit? Limit is what? 20 lakhs. The question does not say he has already received and all. So you take 20 lakhs itself. Now he is covered under Gratuity Act. Covered under Gratuity Act. So you'll have to do 15/26 of the last drawn salary into the period served. Correct? So next is allocation. So allocation is basically what? 15/26 into last drawn salary. Salary is 20,000. Basic salary is 20,000. 10,000 is dearness allowance. Question does not tell you whether it forms part of retirement or not. So you can assume it forms part of employment. So it will be treated as DFA. So you take 30,000. How did you get this 30? 20 plus 10. So that's how you got this 30 into number of years served. So the question says he worked for 30 years and 1 month. So you take 30. When it comes to covered under gratuity, you can round off. Anyways, here it is still 30. So you do into 30. So what will be the answer here? It is how much? 30,000 into 30 into 15/26. How much is it? It is 5,19,231. Okay. Now, which is least? I need not tell you, correct? So here I take 5,19,231. So the taxable amount is how much? 6 lakh minus 5,19,000 will be, I'll use the calculator itself. 519,231. How much is it? 80,769. So you go back to your working, write here as 80,769. Okay, you write that. Next, come to leave encashment. So we need to work about leave encashment. So how do you calculate leave encashment? Come here, write here as a second working, write as leave encashment. So you take what? Received. Okay, so received is how much? Leave encashment received is 3,30,000 less exempt. So first is received. You just take 3,30,000. Next is limit. So what is the limit for leave encashment? The limit is 3 lakhs. The limit is 3 lakhs for leave encashment. You take the 3 lakhs. Third is what? Third is 10 months salary. You take 10-month average salary. So the entire 10-month salary is what? 10-month average salary is this 20,000, whatever you consider as the basic salary. So what happens here is you take the allocation. So allocation is what? 10-month average salary. You'll have to consider the leave credit available to him. So leave credit available is what? It says 330 days leave balance is in his account. So he has remaining 330 into your basic salary. Okay, last drawn salary, only the basic salary. How much is it? That's what you'll have to calculate. So it is 330 divided by 30 into 20,000. 2,20,000. And fourth is 10-month salary. How much is it? It is 2 lakhs. So whichever is least, which is least, 2 lakh is least, correct? So the taxable amount will be 1,30,000. So this 1,30,000 is what you'll have to calculate it. So that's what it has been there. So now, we said we are assuming that the dearness allowance is forming part, right? So here I'm sorry. We said dearness allowance is actually forming part of retirement. In that case, what becomes your salary? Your salary becomes 30,000. So in that case, what becomes your number? 330 divided by 30 into 30,000. Correct? It is 3,30,000. 10-month salary is 3 lakhs. So your actual thing will be 3 lakhs because that's a least. So here your thing will become 30,000. So that's what it is. So you can, as I told you, we can assume whatever it is, whether it is forming part of retirement or not forming part of retirement. Here we have considered as forming part of retirement. So we have taken it in that manner and we are calculating it as 30,000. So it will be, the answer will be 30,000. In gratuity, we just took the dearness allowance because in the case where you have actually covered under the gratuity, the entire dearness allowance will be taken. So we took. Now, since that in leave encashment, we only have to take dearness allowance forming part of retirement benefit. So here we are assuming that the 10,000 of dearness allowance is forming part of retirement benefit. So that's why we are taking this 10,000. So what happens? It takes the entire 30,000 is the second thing. Third thing is pension. Third note, you are taking the pension. So pension is commuted and we'll first calculate uncommuted. Okay, we'll calculate uncommuted. So what is the uncommuted pension? The uncommuted pension is basically whatever is the uncommuted pension that he has been receiving. We have been told that he is receiving uncommuted pension of 5,000 per month for the 1st February 2022 to 13th February. So the uncommuted pension is February and March, 2 months. So the pension is 5,000 into 2. That is 10,000. The next thing is commuted. So what is commuted? We'll have to take the receipt. So whatever he has actually received as pension. So how much is received? We'll take received. Received is how much? He has received a pension of amount of 3 lakh has been received as pension. So we are taking 3 lakhs. Less exempt. Now he is covered under Gratuity Act. So when you are covered under Gratuity Act, what happens? When you are covered under Gratuity Act, it is how much? 1/3, correct? It is 1/3 into the whole pension. So how much of the pension is actually, question says, you have actually got 2/3 of the pension. So now you need to understand how much is whole pension. So if it is 2/3, what do? You do it by 3/2. So you are calculating the whole amount, the total pension. So what will be the actual thing? 3 lakhs divided by 2 into 3 is 4,50,000. You are dividing it by 3. So that gives you 1,50,000. Correct? So the total thing will be, this is 1,50,000 plus 10,000. So the total pension that is taxable will be 1,60,000. The total pension that is actually taxable will be 1,60,000. So you go back here, 1,60,000. So now we have computed these things. That is your basic, dearness allowance, gratuity pension, and leave encashment. What else is left? He was offered a car. So we will calculate about the car valuation. These are all perquisites, right? So transfer of car. So for this also, you need to write. Imagine you'll have to write a note. So under gratuity, you'll have to write note saying dearness allowance will be considered in whole. Will be considered in whole as an employee is covered under Gratuity Act. Correct? Similarly, here we'll say note. It is assumed. It is assumed that dearness allowance is forming part of retirement benefit. The most important thing in income tax is the assumption. The way you assume is very important in your examination, because you can always take a stand. You're free to take a stand, but understand how you wanted to take a stand. Make a clear stand. Whenever there is dearness allowance without any numbers, you can always treat it as with forming part of retirement benefit. So pension, I don't think you need any note. So we'll move on to the next thing, transfer of motor car, right? So transfer of car. So 4 is transfer of car. So what does it say for transfer of car? We need to calculate the cost, written down cost, right? Book value. So we have to calculate it as purchase price. So we'll have to calculate the wear and tear. So the purchase price was how much? 5 lakhs on 30th January 2016. 5 lakhs. So depreciation at what is the percentage given for car? It is how much? We'll go back to the slide. How much is it? 20% on WDV, correct? 20% on WDV. So now what is the rate that we'll have to take? 20%. 20% financial year 2016-17. That is whatever is the purchase price. I'm sorry, actually, I think I've taken the question. I'm sorry, this should actually read as 2019. So we'll take it as 2019, because the reason is only then we'll be calculating for a very less number of years. Otherwise, you'll have to calculate it for 6-7 years. So the question was actually 2019. I put it as 16. So we'll take it as financial year 2018-19. Here it is only January, right? January 19. So the purchase price is actually 30th Jan 19. So it is February, March, only 2 months thing we'll have to do. So it says depreciation at 20% on what? The provision says it is 20% on WDV for each completed year. Please remember here, for each completed year. So it's not talking about months. It is just saying 1 year. So even if it is just few months, you still have to calculate it for the whole year. So you need not bother what is the actual date of this. So that is not relevant. So irrespective of what the question says, whether it is 2019 or what, you still take the whole year depreciation. So what is the whole year depreciation? 20%, 1 lakh. 4 lakhs. Now again depreciation at 20%, financial year 2019-20, correct? 2019-20. So how much is it? 80,000, because we are calculating on WDV. 3,20,000. So that is for financial year 19-20. Then depreciation at 20% for financial year 2021. So what is it actually? So now, I'm sorry, it's actually 1 year, right? So we'll have to calculate it as years. So I'm not going to confuse you, so that we'll write it as till what? 30th Jan 20. 30th Jan 21. And then we'll have 30th Jan 22, correct? So that's the third year. So here you will have to take 64,000. So that is 20% of 3,20,000. So you are left with how much? 3,20,000 minus 64,000. So it is 2,56,000. So when is it sold to him? It is sold on the 30th January itself. So it is exactly 3 years. So now less recovered. Less recovered. How much is recovered? 2 lakh is recovered. So you reduce 2 lakhs. 56,000. So this 56,000 will become a thing here. That is your transfer of thing becomes 56,000. Next is, what is the next thing? So we have done this, done this, done this. We have also completed pension. Gift voucher worth rupees 6,000. Gift voucher worth rupees 6,000. So what stand can we take? We said we'll take a stand as a common stand. The entire 6,000 is taxable. So now we'll work this. So gift voucher. Write a note saying that you have treated the entire 6,000 as taxable. So I'll go here below. It is note number 5 saying that considering that gift voucher is greater than or equal to, I actually write it in words, is more than 5,000, the entire gift is considered as taxable. Write the stand that you're taking. So the important thing that you'll have to do in your examination is inform the valuer, that is indirectly through your answers, inform the valuer that you know the provision and you have answered. Inform the valuer. So indirectly you are telling the valuer, whosoever is valuing your paper will know that this person knows the provision. That's why they're very clearly given. So that will give you a very clear picture, will put an impression in the valuer's mind saying that it is what? The person, the student knows that is you. The student in you knows the provision and have answered. So they will value your paper better. Give that impression to the valuer. So write as much as note as possible to help you get better marks. So now we have completed gift also. The last one is about this, what is that? The treatment of this thing. Here it is about income from other sources. That is, whenever the gift is from television worth rupees 50,000. So it is gifted from what? Colleagues. Whatever we are dealing in salary is only about employer-employee relationship. Here colleagues is not covered under your salaries chapter. It is from income from other sources. But just for understanding purpose, please remember, television is not a gift listed in your income from other sources. So I will not explain, even if you are going to question me in the doubt. It is chapter covering under income from other sources. So for time being, we'll write television gift and say nil. Okay, so we'll just write this, and now we'll write as what? Gross total income. Gross total income. So what does it say? It says 3,380,769, 410, 769, 570, 769, 620, 626, 769, 632, 769. Just see if the answer is correct. I'll just total it once in this also. It is 3 lakh plus 80, 769 plus 30 plus 160 plus 56 plus 6,000 plus 6,000. How much is it? It is 632, 769. Correct. So 632, 769 will be the total taxable thing. Okay, so that's what it is about. So 632, 769 is the thing. Okay, so that's the answer, correct? So 632, 769 will be the answer. So this is how you solve a problem in the question paper. So I'll answer some of the question. Preeti, what do you do? The question does not say that it has not opted for 115 BSc. You can always take an assumption. The best assumption will be to say that it has not been opted. But technically speaking, depends on the number of marks that your question. If it's basically a 16-mark question, you are supposed to also solve 115 BSc. But most likely you will be given the question paper itself. Otherwise, depending on the marks, if it is a 16-mark question or something like that, of course, you'll have to solve 115 BSc. Otherwise, you can keep it as without 115 BSc. So it's always an option, depending upon the mark you choose. Higher the mark, you choose 115 BSc. Okay, so what else are the questions? Updation and CA intermediate is applicable for May 23. So for May 23, the Act will be Finance Act 2022. As of now, whatever provision we have discussed, I don't think there are any amendments specifically. But anyways, I will not be specifying it in the class because the intention is for November 22. What you can do is just cover the, just refresh it with the amendments later point in time. These type of questions will typically be like 8-mark questions or something. And that too, we are only talking about gross total income. What is the conclusion of perquisite? You're talking about the old perquisite, right? Yeah. For Y, it was not taxable. For X, it was taxable. Pooja, different color for different identification. Yeah, that's a good point. Maybe I'll start writing. For time being, what we'll do is I'll do this. Okay, so this will probably give a better understanding for time being. Year after, I'll probably follow that. Yeah, your section first time attend most gratuity. Okay, you're talking about a different number in book. That could be because of the treatment they've given to dearness allowance. See, we have taken an assumption that dearness allowance is part of retirement benefits. Probably in the study material, they would have taken it as not forming part of retirement benefit. In that case, this 30,000 will become what? 20,000, right? If you're treating as another assumption. So this will become 2 lakhs. So this will becomes 2 lakhs. I'm sorry, there is some issue in the sharing. I'll just see if it's possible. Just a second. Yeah, just a second. I'm just checking. Just give me a minute. So is it visible? Yeah. So the difference between your the numbers in your study material and this is purely because that your study material will have would have treated this your these things, that is your what you call the dearness allowance forming part of retirement benefit. So that would have been considered as dearness allowance would have been considered as not forming part of retirement. So this 30,000 would have been taken as 20,000. In that case, this will be 2,30,000. This would have been 2 lakhs, correct? So this will increase by 1,30,000. So probably that is why there is a difference of 1 lakh exactly in the provision. So this 632 could be what 732 769. So that's what it is about. So otherwise, I don't think there will be any difference. So as I told you, it's about a stand you take. You can always write the note. We have taken a note that DA is forming part of retirement benefit. So probably that would have been the difference between our this thing and thing. So that's what it is about. So now we'll move on to the next question. So next question is domestic servant. Domestic servant. Domestic servant. It is about your. It is about Bala. Bala is employed in ARC Limited. Bala is employed in ARC Limited, and as a finance manager, gives you the list of perquisites provided by the company to him for the entire financial year in 21-22. Now, domestic servant was provided by residents of Bala. Salary of domestic servant is 1,500. So, domestic servant was provided, which means it is provided by the employer. Now, salary of domestic servant is how much? 1,500 per month. The servant was engaged by him. Okay, it says it is engaged by him. So now there is a clear wording here. It says it is engaged by him. So which means employee is appointed, employer is only reimbursing. So in this case, what it is taxable to? It is taxable to all employees because it is engaged by the employee and paid back by the employer. So in this case, we'll have to say if Bala, assuming Bala, irrespective of whether it is specified employee or not, it is still taxable. So we'll have to just write a note saying that domestic servant of 1,500 into 12. So that's the first thing. So domestic servant of 1,500 into 12 will be taxable. So that's what it is about. And this next thing, it is about in case of company has employed the domestic servant. What about the company has employed? In that case, it is only taxable in specified employee. So we'll have to write, if the company has employed, it would be taxable if only Mr. Bala is specified employee. Otherwise, it is not specified employee. Free education was provided to 2 children. Free education was provided to 2 children, Aarti and Ashok, in a school maintained and owned by the company. Maintained by owned by the company. The cost of such education for Aarti is computed at 900 per month. Okay. For Ashok, it is 1,200. Here, how much is exempt? How much is exempt? Up to 1,000. Up to your 1,000. Up to 1,000, it is exempt. Beyond 1,000 only, it is taxable. So when you say 900, the entire amount is exempt. But when you say 1,200, 200 is taxable. So what will be the taxable amount? 200 into 12, correct? So 200 into 12 will be actually taxable. So 200 into 12, that is 2,400 will be taxable as perquisite to Mr. Bala in case of education facility, because up to 1,000 it is not perquisite. Only beyond that it is taxable as perquisite. Employer has provided movable assets such as television, refrigerator, and air conditioner at the residence of Bala. The actual cost is 1,10,000. Now, the employer only has provided the use of movable asset. So what did we say in case of movable asset? Whatever is the actual cost minus recovered. In case if it is owned by the assessee, owned by the company, we said 10% of the cost, otherwise higher charges. Here they have said it is 1,10,000. 1,10,000. So here, whatever is the actual thing, that is 1,10,000, will continue to be the taxable perquisite because they have not recovered anything. So the entire 1,10,000 will be considered as the perquisite. The entire amount, that is 1,10,000, will be considered as the perquisite. Last one is a gift voucher worth rupees 10,000 was given on the occasion of marriage anniversary. It is given by the company to all employees above certain grade. So whatever gift per previous year, only up to 5,000, it is not taxable. So since it is 10,000, what can we do? We said either treat the entire 10,000 as taxable or the difference alone as taxable. You can always take a uniform stand saying the entire amount is taxable. So now, since this 10,000 is taxable, you can say that 10,000 is taxable because it is above 5,000. So whenever there is a confusion, take a clear stand across your answer paper. So that's what it is important. So that's it about your 10,000 per employee. Now, telephone provided the residence of Bala and bill aggregating to 25,000 paid by the employer. Telephone is not a perquisite. We said telephone provided to the employer is not basically a perquisite. So this will not come under perquisite. House loan at 6% per annum, 1st April 2021 is 6 lakh. The amount outstanding is 6 lakh. Sri Bala pays 12,000 per month towards principal on 5th of each month. So every month he is paying 5,000. The rate is 10%. The rate is 10%. So what we do month on month, April, May, June, July. So we calculate every month. For first month, it is 6 lakhs into 4%. Into 4%. So 4% is what will be considered as your perquisite valuation. So 6 lakhs into 4% will be your perquisite valuation. The next month, 5,88,000 into 4% will be the perquisite, because 12,000 is adjusted towards principal. That is in May. In June, what happens? Another
12,000. So after 5,88,000, another 12,000. That is 5,88,000 into 12 minus 12,000, which is 5,76,000. So the 5,76,000 will be perquisite. So now this is what you will be treated. So every month you reduce the 12,000, apply 4%. Every month you adjust this 12,000 and calculate this 4%. So that's all you will have to do. All this put together will be your perquisite. Considering the time, I'm not actually calculating it and putting it as a problem. So, but this is how you need to do. So you'll have to treat how each of the perquisite and calculate how much to do it. So with that, we'll probably move on to the next valuation. It is something different from whatever we have been seeing earlier. So we'll try to understand how to do it at this point in time. So as far as your thing goes, the next thing. So the next thing, whatever we are talking about, is about specified security or sweat equity share. So that's what we are talking about, right? So what is sweat equity? We already discussed this. Sweat equity is basically where you have put some extra effort. Employer has put some extra effort for which there is additional benefit given. That is, equity shares are allotted. So you are becoming a owner in some way to that organization because you have sweat out and you have worked more than many other people. So that's what it is there. So here, how do you treat this valuation? You have been given gifted equity shares. So when you're gifted equity shares, the valuation differs if you're listed on stock exchange, if you're not listed on stock exchange. So now when you have listed on stock exchange, if it is only listed on one stock exchange, probably we'll do it this manner. How many stock exchange do you know? You know Bombay Stock Exchange, National Stock Exchange, and you have various other stock exchange in few other locations also. So now let's say this particular share is only listed in National Stock Exchange. Now what do? Whatever date it was actually allotted to that employee, you take the average of opening and closing price on that particular date. So you take that and understand what will be the thing. So that's what you will have to do for average of opening and closing date. Now, if it is multiple exchange, in whichever they have actually recorded highest volume. For example, in National Stock Exchange, 1 lakh shares are sold. In Bombay Stock Exchange, 90,000 shares are sold. You consider whatever is considered in the Bombay Stock Exchange. So that's how you'll have to do it. If it is not traded on that date, for example, let's take today's date, 3rd June. So on this date, you are actually transferring it, 3rd June 2022. If on this date you have actually not transferred, if you have not if you have transferred on 3rd June and there is no trading, on 3rd June, what do you do? If there is no trading on 3rd June, the previous closest date, which is the closest date? Let's say there was trading on 1st June. You take the value as on 1st June. So the closest date, the nearest closest date when it was traded is what you actually have to treat it as the value. So this is when it is listed on stock exchange. What about when it is not listed on stock exchange? When it is not listed on stock exchange, you will have to take the fair market value. FME stands for fair market value. This fair market value has to be calculated within 6 months from the date of transfer. So it should be within 180 days before date of such exercising. So if it is 3rd June, it should have been already calculated within 180 days. So whatever is the period that we are specifying, within 180 days, we'll have to calculate this trading date. So that's what we are talking about as this provision. So clear about this particular clause, that is the, if it is listed, the listed value. If it is multiple, the highest volume. If it is not traded, the closest date. If it is not at all listed, calculate the fair market value by merchant banker. So merchant banker will come out with the value for that organization. If it is ABC Private Limited, the merchant banker will come out with the value for that particular period. Whatever is considered as the trading value. So that's how you calculate the merchant banker's value. It can be on the date of trading or within 180 days. So if you're talking about June, it can be sometime after January. So that is what we are calling it as within 6 months, within 180 days. So that's what you are referring to as this highest, this when it is not listed on a stock exchange. That is, with it's not listed on the stock exchange. So this is what it is about thing. Now, if something has been recovered from the employee, what do you do? If something has been recovered, like all other provisions we have been stating, it must be reduced. So if you have actually recovered some portion, if your value of the stock is 30 per share, you have recovered 10 per share, only 20 will be treated as perquisite valuation. So whatever is required will be considered as reduction. So that's what you have to do with respect to this. And finally, we have been talking about this closing price, right? Opening price, closing price. What is the closing prices? Last trade on that particular date. If you're talking about 3rd June, on 3rd June, on the closing date, whatever was the last date will be considered as the your settlement date. So that is the date. The sell price, the selling price, the last selling price of that date will be treated as the closing price. So that's what it is about. So what do you mean by closing price? Will be the selling price. So the previous day's closing price will be the next day's. So the 2nd June's closing price is 3rd June's opening price. So whatever you calculate will be done accordingly. Okay, so that's how you have to do. Now, what if it is not an equity share? You have given something else. In that case, it could be any other securities. For example, debentures or some form of preference shares, whatever it is. So in that case, what will you do? FMB as determined by the merchant banker. So similar to this, whatever we treated here is same here also. So whatever is the fair market value of the perquisite will be considered as the within 180 days. If something is recovered, that has to be adjusted also. Clear? So that's what it is about. The last thing that with respect to this is there's a new amendment in Finance Act 2021 only, where they have said whatever is the tax related to the perquisite. This is basically a final provision only. It's more important in final, but anyways, you can always know this. So the tax on perquisite of this particular provision, that is this equity share, should be paid in the year of exercising of option. That is, when should you actually pay? You are allotted some shares in this year. Let's say you are allotted in what? Previous year 21-22. You are allotted in previous year 21-22. In this previous year 21-22, if you are actually allotted, when should you actually pay? So basically, it should be paid within 48 months from the end of the assessment year. So this assessment year end is 31st March 2023. Assessment year end is 31st March 2023. 4 years from this, 24, 25, 26, 27. So in between assessment year, before assessment year 26, 27, it should be paid. In which sale is made. In case before that, if sale is made, then it has to be paid in that year itself. In which assessee ceases to be the employee. Let's say assessee is quitting the employment in between that 4 years, then that day becomes the thing, whichever is earlier. So this is what this provision, just understand, don't go much deeper. So basically the taxable of perquisite is applicable within 4 years from the assessment year in which the shares are allotted, or the date of sale. Company transfer it to me. If I am selling it to a third party, then that date, or finally I have quit that company. If I'm part of this ABC company, I'm quitting that company that date. Out of these 3 dates, whichever is earlier, I'll have to pay within that particular date. So that's what it is relevant for taxation of your equity shares. So this is about your equity shares. Clear? So we'll see a small example on this equity share and then come back to this particular thing. So as far as this equity share is concerned, we are trying to say that there is a company called Leap Limited, which is providing equity shares to Ram Prasad in June 2021. The shares were allotted at 200 per share against a fair market value of 300 per share. Fair market value of 300 per share on the date of exercise of option. The fair market value was computed in accordance with the method prescribed in the act. So that's what it is about. Now they wanted to know what is the perquisite value of sweat equity shares allotted to Ram Prasad. And in the case of subsequent of those shares, what would be the cost of acquisition of those equity shares? So there are 2 concepts. The first concept is related to salary chapter. The second concept is related to capital gain chapter. So we will only answer the first part of it so that we leave the rest to you to understand only at the time of capital gain. So the first part of it, the valuation of perquisite. The fair market value is 300. The fair market value is 300 minus 200, correct? Minus 200 will be the thing, that is 100 per share. So whatever is there, how many shares provided? So whatever is there, it is 100 per share. So if you are actually allotted 1 lakh shares, 1 lakh into 100 will be your equity, will be your perquisites. So it is 100 per share will be your perquisite valuation. So that's what it is about. So whatever it is, you'll have to treat it as perquisite valuation based on the number of shares. So it is 100 per share will be the perquisite for Ram Prasad. The second point, I'm not discussing it right now because it will be considered in the capital gain. Okay. Next thing is, there is one more problem. I'll just skip considering the time constraint because we'll have to cover this deduction and finally a relief. So as far as deduction goes, it is 5,000 or amount of 50,000 or amount of salary. So if your salary is more than 50,000, your deduction will be automatically 50,000. If it is less than 50,000, whatever is your salary will be deduction. So that's why we are calling it as whichever is lower. So deduction under section, all these are deductions under section what? 16. Section 16. So under 16, the standard deduction is 1, entertainment allowance is 1, professional tax is 1. So we are going to see these 3 things. As far as standard deduction, it is 50,000 or amount of salary, whichever is lower. As far as entertainment allowance, it is fully taxable. It is only exempt in case of government employee. So as far as private employee, it is fully taxable. In case of government employee, whichever is lower. So whichever is lower. So actual receipt 5,000 or 1/5 of basic salary. So 20% of basic salary, 5,000 or actual receipt, whichever is lower is what is exempt in case of entertainment allowance. So that's what it is about. And in case of professional tax, if borne by employer, please understand the word, if borne by employer, it must be part of salary. So first you add it in salary and then deduct it. If it is borne by employee, it is only deducted. It is not part of salary. So maximum deduction is available is 2,500 per annum. 2,500 per annum will be the maximum deduction. So in this example, let's say this Goel has received 40,000, dearness allowance is 50,000, commission is 10,000. All these are fully taxable, right? So entertainment allowance is 4,000. What we are saying here is we are talking about a private employee. So we are asked that what if he is a state government employee? What if Goel is a state government employee? So 40,000 is fully taxable, 15,000 is fully taxable, 10,000 is fully taxable, 4,000. What did the provision say? 4,000 or what? 5,000 per annum or 20% of basic pay. What is basic pay? 40,000. So this 40,000 into 20%. So what will be 20% on this? 40,000 into 20% is 8,000. So 4,000, 5,000, 8,000. Whichever is lower. Which is lower? 4,000 is lower. So this entire thing will be deducted. So there will be a deduction of 100% because 4,000 only is the lowest amount. And medical expenses reimbursed, whether it is taxable or not, 25,000 will be taxable because medical expenses is completely taxable. As far as is professional tax, 1,000 is paid by employer. Out of 2,000, 1,000 is paid by employer, 1,000 is paid by employee. What do you do to this 1,000? You first add it to salary and then deduct it separately. Other 1,000 you only deducted. So deduction is 2,000. Part of salary will be only 1,000. And Goel contributes towards 5,000 towards recognized provident fund. Of course, that is allowed as a deduction, that 5,000. I'm just trying to summarize so that we rush through this. All these are illustration problems. Probably in the next class, we can discuss this for some time and then go on to the next session. So these illustrations are straight from study material. Based on what I'm trying to tell you right now, you can try to cross check with your study material. If you still have some thing, we can first take some 15-20 minutes to solve these and answer these questions and then move on in the next class. This is just to save some time. So that's all about it. And finally, I have only one area to cover. This also I'll just briefly explain. Solving this problem, we'll do it in the next thing. We'll only understand what relief is all about. So as far as what relief is all about, relief is provided where there is arrear salary, where there is advance salary. So when there is arrear salary, when there is advance salary. Similarly, it is provided when there is arrears of family pension. So that is also provided. And no relief under section 89. No relief under section 89 is provided if there is voluntary retirement scheme or termination. So only for current employees it is provided. One who's opted for voluntary retirement scheme or termination, the relief under section 89 is not allowable. What do you do? I'll just briefly say, whatever is the salary would have been taxed in that year. Let's say if it is previous year 10-11, what would have been the actual tax in 10-11? What is the tax current year, that is in previous year 21-22? That difference, okay, that difference will be considered as the arrear. So this problem we'll solve it and understand in the next class. So basically, you calculate the tax for 10-11, you calculate the tax for 21-22. In both the cases, you calculate tax including this arrear, not including the arrear. Please remember, you calculate tax for both years, that is previous year 10-11, previous year 21-22. including the arrear, without including the arrear. Then calculate the extra tax and identify. So this is the basic summary of how relief under section 89 is calculated. We'll anyways work this in the next class to solve, to see how this actually works out. So for time being, we'll only understand the basic concepts. What I will do now is, with whatever we have covered now, if there are some basic questions here, I will actually take it, or else we'll actually continue it. So we'll see this. So I'll take some of the questions here right now, and then we'll move on. So just give me a second where I just move on to the question session. So whatever we discussed now is basically what all the provisions of your income tax with respect to salary. So we have covered all the provisions. So we'll try to summarize these provisions and these things in the next session. We'll also solve some problems relating to this testing your exercise, so that we know how exactly you'll have to appear it, prepare it in the exam time. How do you actually do it? So we'll do that in the next session. So for right now, for 5-10 minutes, I'll just see answering some of your questions and then proceed further. So what are the questions? What is 115 BSc? I guess you would have studied in the tax chapters. I think I've taken some extra time. Some of you have. I don't have an option because I wanted to complete it on time. Okay, so not much of questions. So I'll just, some of you have asked what is sweat equity and ESOP. Both are same. ESOP is employee stock options, and another is sweat equity. Both are same. So otherwise, I guess I have answered most of the questions. I know I've taken much of your time today. That is because I wanted to cover as much as possible for today. Sorry for taking your time. I will always say this extra time will definitely be benefiting you for the examination. So thank you for the session today. We'll see you tomorrow with practical problems and understand how to work out in the problem chapter. So yeah, thank you for the session. Yeah, concluded.